Hello, with me today I have Ashley Kelty, Senior Research Analyst, Oil and Gas at Panmure Gordon. Hi, Ashley. Lots to talk about at the moment. It's been a dramatic period for global energy markets and the oil industry. So oil prices have hit record highs and they remain volatile as the conflict in Ukraine continues. Could you just sum up where energy markets are at the moment?
Well, I think they're really all over the place, to be honest, is the easiest way to answer it. We've seen unprecedented levels of volatility in the market, both in gas and oil. Um, I think that markets are beginning to settle down a little bit as the crisis in Ukraine drags on and people are becoming a bit more sort of comfortable, and it's probably closer to the end than it was a couple of weeks ago. However, it's all very much going to be dependent on what happens in the Ukraine and also in China. China's fighting another COVID surge at the moment, and that has spooked the market about a big drop in demand. All the forecasts are showing that even with this mild drop in demand, that there's going to be a supply shortfall later on this year, which is driving a lot of it. The sanctions are going to be in place for a long time. There's no way, even if Russia sued for peace today, that those sanctions wouldn't disappear for a few months. So I think we can be fairly secure in high energy prices probably through into next year. I think gas prices will also remain strong. There's moves obviously outside of the sanctions that are in place around gas storage in the EU, which is part of what's precipitated the sort of 400% surge in gas prices. And I think what we will see now is markets being a lot flatter throughout the year than historically, where you've got a peak in the winter and a sort of big fall off over the summer and seasonality. I don't think we'll see such big swings in the future. So if you're a gas producer, that's great. For consumers, it's not so good. And I think it's going to be pretty tough for the next few months. I don't think that while prices have come back massively, I don't think they're going to drop off. I would be very surprised if we got below £1 a therm anytime soon.
Okay, I mean, well, the conflict in Ukraine has made energy independence one of the big issues for Western governments, including our own. While renewable energy is clearly the long-term option, what's the outlook right now for oil producers in the North Sea? Are they in a good place?
Yes, I mean, I think energy producers, full stop, around the globe are in a good position, particularly those that are able to sell their energy at market prices. I think there's a lot of companies that have long-term gas sales agreements. So that's a lot of the companies that are operating in Africa, the likes of, say, Energean, for example, which, while it is purely gas focused, or primarily, it's all been sold under contract signed years ago. So the actual prices that they're going to be receiving for their gas, even though they have lots of it, are well below spot rates and market rates just now. So I think the share price there has certainly run ahead of the actual value of that gas. However, in the UK, it's looking good if you're a producer and selling market rates. I think the latest sort of government initiative to do another licensing round and to try and make the planning and permitting process for onshore developments a bit easier can only help activity. And I think that some of the recent deals as well, a bit of consolidation in the market, can only help accelerate activity. But it's a problem. I think it's after sort of essentially we've had 70 years of peace and complacency over the ability to source energy from around the world from friendly nations, and I think that illusion has been shattered in the last couple of months.
Despite the upsurge in ESG investing, green energy, I'm assuming that that doesn't make it any harder for small oil companies to raise money. There's still lots of money out there waiting to go into fossil fuels.
Yes, I mean the ESG funds, I think their attitude has changed for a couple of reasons. One is post COP26, and I think there's now a greater understanding of the energy transition. And also the just transition, which is not something that's not talked about very often, and that's essentially around Africa, and that's where the argument is that they should be allowed to produce their hydrocarbons, for the simple reason that that's the only means that they will be able to develop their economies such that they could then look at alternatives such as renewables or solar. But in the meantime, banning them is a form of imperialism, as it were. So I think there's definitely a wider understanding. The fact that gas is the key transition fuel is definitely making it a bit easier for ESG investors to look at that. And there's also the fact that a lot of their investors have been looking at this and saying, hold on a second, energy prices are double, triple, quadruple what they were 12 months ago. We're missing out on that. We'd actually like to get a piece of that action. Is there a way that you can get around that? And I think they're now finding that they can. I think what has happened between the weather last year, which kicked off the surge in gas prices when there was a large anticyclone parked over northwest Europe, which meant the wind didn't blow. And essentially that showed that while there was a lot of renewable capacity, it wasn't sufficient. And that triggered the gas price rise. And then that was turned up to 11 when Russia invaded Ukraine.
Do you have any favourite stocks to play the North Sea oil thing?
In the North Sea, I think gas producers are definitely favoured over oil. I mean, traditionally it's been the reverse. But at current prices, oil is worth about half what gas is, and it historically has been the reverse. So at the moment, gas-focused producers are more attractive. So I would say in the UK, the best ones to play the gas price are Kistos and Serica. IOG is a third option, but they've only just started and they've had all sorts of problems, and I wouldn't be as confident that they will be able to deliver what they've claimed, whereas Serica is well established. It's also benefiting now from the end of its sort of pay-away deal with BP for the Bruce, Keith and Rum acquisition from a few years ago. So it now retains 100% of its free cash flows. And Kistos has transformed itself with its Dutch acquisition, followed by buying a stake in the West of Shetland assets of Total. So it's doubled its production just as gas prices went through the roof. So it's throwing off lots of cash as well. So they would be probably, I'd say, the favourites at the moment. But certainly in the oil space, there's a few others that are quite interesting. I think in terms of development stories, I think Jersey Oil and Gas and Orcadian are quite interesting. I think high oil prices and the need for energy security will make it easier for these companies now to actually get the investment that they need for their developments.
I mean, okay, that's the small caps. What about the oil majors, of the large cap producers? Is there one that you would pick over the others?
I've always had a soft spot for BP. I think BP has been a bit better on articulating its strategies. It pivots away from fossil fuels. Shell, while it is a big LNG producer, seems to be playing catch up and doesn't seem to be quite as concise. I think that story has changed now following Russia. Obviously, BP were quick out the marks to withdraw, and in one sense, it will benefit them because they're actually able to offload a chunk of fossil fuels off the balance sheet in one fell swoop. What the cost of that will be, it's certainly going to be multiples of what they've claimed in terms of write-downs and impairments, but it does actually pivot them better towards renewables, and obviously gives them a disproportionate uplift in the mix of the portfolio. Another one I quite like, or is quite interesting at the moment, is Total. Whilst obviously not impressed by their refusal to exit Russia, I think that's not, that doesn't certainly help the chance of there being an end to the EU bankrolling the Russian war machine. But they've made a huge discovery offshore Namibia, as has Shell. So it was believed that these were multi-billion barrel discoveries. However, there's now reports in the news today that the Total discovery could be the biggest deepwater discovery in history. So they're now estimating it could be in excess of 13 billion barrels, which would be tremendous and would, I think, probably trigger a stampede towards Namibia in the way that we've seen in Guyana following excellent success in the Stabroek block. So that would be very good for the likes of Global Petroleum, Eco Atlantic, to name two small caps that are certainly exposed there and looking for farm-out partners.
Great. So an area of the world to keep an eye on over the next.
Yeah, well, exploration's coming back now. I think $100 oil and the realization that fossil fuels aren't stopping anytime soon, I think, has now encouraged companies to actually look at exploring again. And also some of these majors will need to start exploring to replace the reserves that they've lost in Russia.
Great. Ashley Kelty, Senior Research Analyst at Panmure Gordon. Thanks ever so much for joining me today.
Thank you very much for your time.